Imagine being in a gold mine, each piece of gold symbolizing an opportunity for wealth and prosperity. Now, replace that gold with shares, and you have a visual representation of the financial market. In this bustling world, each share is a golden opportunity, waiting to be discovered, waiting to be capitalized upon. As we venture into the depths of this mine, we will uncover the different types of shares: common shares, preferred shares, convertible shares. Each type, like different kinds of gold, has its own unique characteristics and potential for returns. So, join us as we don this hard hat and pickaxe, symbolizing our commitment to unearth the true value of shares. As a backdrop, we've chosen an eye-catching golden hue to represent shares. This serves as a metaphorical goldmine of opportunities waiting to be discovered in the world of investing. So, let's dive in and start unearthing the gold in the world of shares. Welcome to our comprehensive guide on the diverse world of shares. Picture this: a bustling stock market, traders shouting and gesturing, a flurry of numbers on screens. But at the heart of it all are shares, the building blocks of the financial market. They're more than just pieces of paper, they're tickets to a world of opportunities, a world that has shaped the fortunes of many, including the likes of Warren Buffett. Whether you're a novice investor taking your first steps, or a seasoned pro looking to brush up your knowledge, this guide is for you. Dive into the fascinating world of shares, and who knows, maybe the next buffet could be among us. Tuned as we break down the complexities of shares and their types in the following scenes. Ever pondered about the various types of shares in existence and how they can shape your investment portfolio? Let's demystify this enigma together. Essentially, a share signifies a fraction of ownership in a business. When you purchase a share, you're buying a small portion of that company's assets and earnings. But it's not as straightforward as it seems. Shares are not all cut from the same cloth. They come in numerous types, each with its own traits and potential gains. Some shares grant you voting rights in the company, while others might give you a higher claim on the company's earnings. The kind of shares you to invest in can greatly define your investment strategy and results. Who could have guessed that such small fractions could wield immense power, right? Now let's delve deeper into the types of shares. There are Type A, B, and C shares, each with its unique characteristics. Type A shares are often accompanied with more voting rights than other classes, giving you more say in the company's decisions. Type B shares might have fewer voting rights, but they compensate with other benefits that can be advantageous to the investor. Finally, there are Type C shares, which usually come with no voting rights but may offer other unique advantages. Understanding these differences is crucial as they play a significant role in your investment journey. So buckle up as we navigate through this fascinating world of shares. First off, we have common shares, the most, common type of shares. These are the shares that most people are referring to when they talk about buying stocks. Common shares come with a bundle of features that make them an attractive option for many investors. One of the key features of common shares is voting rights. As a common shareholder, you're not just a bystander, you've got a ticket to the big game, a seat at the table. You have the power to vote on important company matters, from electing the board of directors to approving major corporate changes. It's like your voice in the company. Then there's the potential for dividends. Dividends are a portion of a company's profits that are distributed to shareholders. They're like the cherry on top of your investment sundae. However, it's crucial to remember that dividends are not guaranteed. They're dependent on the company's financial health and the decisions of its board of directors. What makes common shares particularly exciting is the unlimited potential for growth. If the company does well, the value of your shares can skyrocket, leading to a handsome return on your investment. However, with great potential comes great risk. If the company performs poorly, the value of your shares can plummet. This means you could lose a substantial portion, or even all, of your initial investment. But let's not forget, risk is part of the game when it comes to investing. The key is to manage it wisely. Research the company, understand its business model, and keep an eye on market trends. Remember, investing is not about gambling your money away, it's about making informed decisions. So if you're someone who likes to have a say in the company's decisions and can handle some risk, common shares could be your game. On the other hand, if you prefer a little less risk and a bit more predictability, preferred shares might be more your style. Now imagine yourself in a world where the roller coaster of the stock market is a bit more like a scenic train ride. Sure, the highs might not be as exhilarating, but the lows aren't as stomach-churning either. Welcome to the world of preferred shares, where stability and predictability are the name of the game. One of the key features of preferred shares is the stable dividends. While common stockholders are left wondering if they'll receive a dividend, preferred shareholders rest easy knowing that their dividends are pretty much guaranteed. And not just any dividends, mind you. These are often higher than those offered to common shareholders. It's like having a premium seat at a concert. You're guaranteed a good view no matter what. Another advantage of preferred shares is that you're higher up on the food chain. If a company goes belly up, preferred shareholders are paid before common shareholders during the liquidation process. Think of it like being in line for a buffet. If you're a preferred shareholder, you're at the front of the line making sure you get your fill before the food runs out. But it's not all sunshine and rainbows. Preferred shares come with their own set of drawbacks. For starters, you won't have voting rights. So, you won't have a say in the company's decisions. It's like being a passenger in a car. You're along for the ride, but you don't get to steer. Additionally, preferred shares have limited growth potential. While common shares can skyrocket in value, preferred shares are more consistent. They're like a reliable old car. They won't win any races, but they'll get you where you need to go. So, while preferred shares might not give you the thrill of high risk, they offer a steady ride with a bit more peace of mind. Now let's talk about convertible shares, the chameleons of the share world. They're not your typical equity. No, these shares are a bit more flexible. You see, convertible shares are a special type of stock that carries with it an option, a choice. They can be converted into a predetermined number of common shares at specific times during their life. Imagine you're at a buffet. You've got your plate filled with a variety of foods. Now you've got a sweet tooth and you see a chocolate cake. But you've also got a slice of cheesecake sitting on your plate. Now you can swap that slice of cheesecake for the chocolate cake, if you want to. That's kind of what convertible shares are like. They're the cheesecake that can be swapped for chocolate cake, or in finance terms, common shares. Now, why would you want to do this? Well, the main reason is the potential for growth. If the company's common share price goes up, your convertible shares can be switched, allowing you to reap the benefits. And if the common share price drops, well, you can just hold on to your convertible shares and continue to enjoy the dividends they provide. However, there's a trade-off. Convertible shares usually offer lower dividends than non-convertible preferred shares. Why? Because you're being compensated for the potential growth opportunity. Think of it as a trade-off between a bird in the hand and two in the bush. So what's the takeaway here? Convertible shares offer flexibility. They provide potential growth through conversion into common shares while still offering a steady, albeit lower, income through dividends. They're a way to have your cake and eat it too, or rather, to have your cheesecake and potentially swap it for chocolate cake. Convertible shares, the best of both worlds, or so it seems, but remember, nothing comes without a price. Sure, they might seem like a sweet deal, but as with any investment, it's important to understand the risks and make informed decisions. After all, not everyone likes chocolate cake. So now you have a basic understanding of the different types of shares. Impressive, isn't it? But let's not get too comfortable just yet. This is merely tip of the iceberg when it comes to the vast world of shares and investments. Remember, every type of share with its own set of pros and cons. What works for one investor might not work for another. It's all about aligning your investment choices with your unique financial goals and risk tolerance. So, don't rush into any decisions. Instead, take your time to further your research and understanding. Read up, ask questions, consult with financial advisors. Knowledge, after all, is the best tool you can have in your investment toolkit. So, whether you're leaning towards common shares, preferred shares, or convertible shares, make sure you're making informed decisions. Thank you for joining us in our exploration of shares. If you found this video helpful, remember to like, subscribe, and share video. Your engagement helps us to create more content like this. Until next time, keep investing and keep learning.